Hey everyone, John Henry here, SlingshotFutures.com. Today we're going to be talking about market structure and how to find it, and kind of what is it, right? What do I mean by market structure? So when we're talking market structure, what we're looking at is, you can kind of think of it like the scaffolding of the markets. It's the overall structure of the markets, why they are forming the way they're forming. We're not zooming way into the candle structure. We're looking at the overall kind of zoomed out picture, right? So it's a little bit more of a zoomed back kind of, bigger picture, if you will, on how the markets are moving. So one of the big types of structure that I think pretty much everyone has seen before is, let's say you have a market that's moving higher, pulls back, breaks out. Common area of structure would be a retest of the previous swing high as support, right? That's, I think, one that pretty much everyone has seen or even used at some point in their life. That is a very obvious level of structure. Now, the reason I call it structure in the first place is because it's kind of like the structural backbone. You're not looking at the candles, you're looking more at the overall movement, and that is what we generally will want to see, right? So if we look at the S&P here as an example, we have a pretty strong level of structure. Not only do we have a swing high, but we have a nest, right? It's a cluster of swing highs inside of here. We have a triple top, an attempted breakout which failed, back down again, popped back up again. This is a structural area of interest inside of here. So if the market can break above that, we assume that it will come back and utilize it as support, and that's exactly what it did right there. That's what I mean by structure. Now, does structure have to be a previous swing high, swing low all the time? No, of course not. There's a lot of different types of structure. You could consider a wedge or a channel or any other type of market formation to be structure. It's what the market formed, right? So any area that can be broken out of, pulled back to, use it as support or resistance, etc., is generally speaking a type of market structure. So how do we find the best ones? Since there are so many different variations of it, where do we go to look to find the best options, right? So to find the best ones, we're looking for areas that have multiple tests, right? A blank or naked swing high like we have here could be a level of structural support, and it was in this case. But generally speaking, when I'm looking for something like that, I want some proof, right? Just because it's a swing high, who cares? I need more than that. Don't just give me a swing high or a swing low. Give me multiple tests of it. Give me a zone of interest. Give me something to work with. So when I'm looking at them, I generally look at them more as a zone. And we have the high here, that's obvious. But it also came down and tested it in multiple other places, right? So if we look at multiple other places, what do we have here? Well, we have the swing high here. We also have several tests inside of there, a wick test here, high closes and opens here. Everything is showing that this area, right, more of an area than a level, is going to be a zone of interest. So if we break above that, that's going to be the zone that I want to find some structure in for the market to bounce off of. Another great example would be looking at the overall channel structure that's in play here. We have a very nice channel working its way up, and if we get down to the lows of that channel, that will be a structural level of interest. Now let me extend this out to the right a little bit further here. Let's see. Let's send this, well, I'll just do it manually. Let's send this farther out. There we go. And we'll copy paste this on the highs. Perfect. So now we have a level of structure that we can work with in the sense that we have a nice little channel, right? At that point in time, you have point A and B and C, right? So we have A, B, C. That forms the channel. We're looking at this area as an area of interest. Now, because this is a bull trend, right? This is a bullish move up. I would prefer to find structure on the pullbacks. Now, one of the best combinations or best types of structures is when you find a combination of levels, right? So not only could you have a channel low, you'd have a moving average, a VWAP, a previous swing, something like that that all lines up in the same place. That is a really strong area of interest. On the S&P here, we have man, how many highs is this? 1, 2, 3, 4... and then a bottom. So it's a quad top and a single bottom, all coming up in the same area. And we also have the rising channel low support coming in the exact same place. If we look a little bit further, we can see that there may be a wedge bottom coming into the same location as well. So now we're starting to build this zone of interest. Now, in this case, it didn't quite tap it. It missed the physical test by a few ticks, but you get the idea. That's what you're looking for. If you're looking for a strong zone of interest, that's what you want to find. You want to find the big levels that could potentially give you something to work with later on down the road. Now, let's look at a different market and give us a different example here. Crude oil. So here, crude oil has a major structural level of interest. We actually were looking for a possible short off that area. And the reason that's a structural area of interest is not just because it's a swing high. I don't care that it's just a swing high. We need more than that. And if we go back, what do we have? Well, if we draw this line backward, you'll notice why I like this as an area of structural support. This is a massive level of support that the market was respecting all morning. Now, this is 2 in the morning, so there's nothing I can do about that. But when it comes back and proves it once again that that's an area of interest, now we know if the market comes back to this, we're probably going to get a reaction. And you could have even said that coming into this spike higher, let alone the reaction a little bit later in the day. So that's what we're looking for when we're talking about structure. It doesn't have to be anything crazy. You don't have to spend hours and hours every day finding them. But generally speaking, you're just looking for a multiple area of confluence to create a zone of structure that you can utilize in your trading. And that can be swing highs, swing lows, wedges, channels, you name it. If you can get multiple things stacking up in the same place, you've got yourself a potential area of structural interest. So that's going to do it for this one. I hope you found it interesting, useful, maybe something to sink your teeth into a little bit, maybe even add to your own personal tool belt. If you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Of course, underneath the video, give us a thumbs up, like the video, subscribe to us so that you're notified every time one of these videos comes out. And to make sure that you're getting notified, make sure to click the little bell icon to the right of that so that you get it in your email box as well, so that you know when all these videos comes out and you don't miss anything important. That's going to do it for this one. I hope you had a fantastic trading day today. I hope you have a phenomenal trading day tomorrow, and we'll see you in the next one. Thanks.